Hi, I'm Jim Juback for Juback Asset Management. This is a JubackAM.com video for January 8th, 2019. Back before all this bear market stuff, Uber was expected to go public in early 2019. In fact, back in November, it was one of the most anticipated initial public offerings of this year, which is saying quite a bit, since back in November 2019 it was expected to be one of the hottest years for initial public offerings, IPOs, ever. Then on the list for 2019, Uber Technologies with a private market valuation of $72 billion, Lyft with a private valuation of $15 billion, Slack Technologies, the office collaboration software maker, somewhere around $10 billion, and maybe Airbnb with a valuation of $31 billion. The last time 3 U.S. technology companies with valuations of $10 billion or more went public was in 2000 at the height of the dot-com bubble. A decided downturn in the U.S. stock market has taken the NASDAQ, the exchange most likely to host a new technology company, down more than 20% into bear market territory, which means that these still private companies are rethinking the when in when we go public. Part of that is a question of valuation. Going public at the height of a bull market instead of doing a bear market would put billions more into the pockets of investors who funded these companies when they were just toddlers. But waiting carries its own risks, since there's no guarantee that the current down market will be over by mid or even late 2019. A vocal and growing minority of investors are looking for a recession in 2020. As much money as a company might leave on the table by going public in a stock market downturn, it would leave more on the table going public in a recession. But there's also the question of the kinds of questions that a risk-averse set of investors would ask during a bear market that might lead a company to put off a public offering. One of the biggest is, when do you think you might turn profitable? Once upon a time, when I first started covering venture capital in the 1980s, companies didn't go public until they showed a profit. Those days are now far behind us, and companies showing nothing but red ink and promises frequently launched successful IPOs. But in the midst of a bear market, you can expect the doubters with their sharp pencils to be out in large numbers. This might be most important for an Uber IPO. You see, Uber isn't profitable, or at least it wasn't in 2017, when the company lost $44.5 billion on gross earnings of $7.4 billion. Top-line revenue was $37 billion, but most of that went to drivers. A filing for a public offering would give investors a deep dive into Uber's financials, including return on equity. The company had raised $17.3 billion as of December, and its profit margins. Among other questions for Uber is, does it want that kind of scrutiny right now? This has been Jim Juback for Juback Asset Management Video.